We've had some excellent sharing of ideas and different uses of the various pivot point trading tools. The approach we've been looking at together collectively as a beta group. I have the group in a collaborative forum, uh, interacting and sharing what they're finding. This was something I came up with over the weekend that I just put out to the group as we're expanding time frames and settings on the indicators for both our automated pivot point trading strategy that the group has for trading these setups fully automated, or for those that want to do it manual discretionary. I came up with a setup that I came to the put out to the group today. I call it the diamond dot. So even on a day where we had a absolutely wild, it was actually the worst statistical cyclical range open for the US market for all of 2025. The worst day before was September, and then I think there was a day in May, and then there was one back in like March. But this one was the worst. So we had the most amount of cycles per unit of time and the narrowest range of those cycles for the initial. And I usually measure the first 30 minutes. So it was the worst for the first 30 minutes. And I think it was the third worst for the first hour. So the range did start expanding, but the first 30 minutes is the main thing that we want to look at. It was the most cyclical oscillating range of 2025. So if you can survive that day, you're golden on every other day where it just takes off maybe one false move and then the main move, or, just takes off up or takes off down soon after the open. So we don't trade automated in the first 2 minutes. So this vertical line is right at 8:32 U.S. Central Time. So like the last bar that would be prior to 8:32. We'll take any signals after that. So institutional side was working automated future side action, and then from this point going forward at 8:30, they were doing zero DTE options automated, regular options automated, futures automated, and some stocks. And they were cycling both sides of the range as they were likely doing some rebalancing and some positioning, leading into the day. So you don't get movements like this naturally. This is all from institutional automated activity, because in the end, they run buy program activity and sell program activity automated, and that flow of overall buying and selling, it pales in comparison what retailers are doing, or even moderate players. But anyhow, this is just another setup of many I showed to the group, or some approaches. I call it the diamond dot. So we take our adaptive trend cloud that puts out diamonds on the pivots, and then we have our primary dot signal on the PPG, pivot point group 1 indicator. So right out of the 8:32 US Central Time diamond dot, diamond gives you an audible tone, heads up. Hey, get ready. You might be getting a dot. Get the dot. You get in, go grab 30 points. Get a diamond, hear the tone that you use for the diamond, because all of our tools, all of our symbols have audible alerts. So now I get a diamond dot. So here we had a diamond dot long. Now we get a diamond dot short. Hear the diamond, get ready, hear the dot. And it's easy. You get the dot, you see it, you get the audible tone. I'm not on a time frame where the bars are moving like hyper fast. You fire off a trade with an ATM strat. Or you can go with third-party tools and utilize the outputs from our indicator and say, hey, if I have a diamond and within, 7 bars, I have a dot, at the close of the dot, at the output signal, fire off a short, put my stop here, my entry at market order. When I get X amount of distance, move my stop to break even plus. Just the same thing you can do trading fully automated with third-party tools, or you can do it manual trading with the NinjaTrader ATM, or some of the companies out there that have mechanisms like an ATM that's a little bit more easier laid out to customize it. But diamond dot, get in your entry, go grab 30 points, be done. Diamond dot, get your entry, go grab 30 points on the trade, be done. Diamond dot, go grab 30 points, be done. Diamond dot, go grab 30 points, be done. Diamond dot, go grab 30 points, be done, and so on and so on. So there's many ways that pivot point trading, this style of, where the pivot points of price are very prominent. And that's what we're doing in our beta group. We're attacking like the myriad of different ways that we can combine hybrid tools that have advanced math so that they're very responsive to price, and then also have unique ranges of adjustability in each indicator and how it reads price. And a matter of fact, my PPG1 indicator, the pivot point group 1 indicator, that commands our automated strategy, or is a component of our automated strategy, I put math in that indicator that I know works well with symmetrical Renkos, meaning Renkos that look very angular in nature and look geometric, as opposed to regular Renkos. So anyhow, we're testing out these setups on Ninja Renko, on Livewire Renko, on Renko BXT, that's sold by the TickBlaze, and that particular group. They have it for NT8 and they have it for the TickBlaze platform. So those are kind of the three main Renkos we're all working with as a group right now. And in the end, we can pretty much replicate setups from one Renko to the other, because they all have similar patterns of adjustability. So there's lots of opportunity here with these different types of Renkos. Now, after I evaluate the three Renkos, I'm going to build my own Renko for the group that has tick-by-tick information that'll work in concert with our automated strategy. And that way we'll just have a Renko that's just part of the program. And I should have that already determined and figured out by the middle part of next week. Then I'll send out a project build to the programmer to get it built, and it'll probably take them like 2 days. It's not that hard because I already have custom Renkos that are symmetrical. I just want to work with some of these other ones and see which one is the most user-friendly to adjust for brick size offsets and all that kind of stuff. Now, the nice thing is those type of setups that I showed you, and I've talked about this before, one of the elements of a really good system build from this pivot point trading approach is what I call the 1-2. Okay, so now if you can make it through the chop, let's go look at a more regular part of the trade day. And the one thing I want to show you is in this pattern of what I call diamond dot. See how the short signals have a slant to the signal? Slant to the signal on shorts for diamond dot. Diamond dot. And then for the long signals, there's a slant. And where they're real close together, those are the signals. Where they're far apart, that's a warning to me that there's cyclical price action going on. These mean there's good linear price movement taking part out of the reversal. I'm getting a very linear reversal. So the more slant or having slant is key. Where they're flat, that means I'm getting reversal out of cyclical oscillations, not as strong. So just kind of some visual cues. And then the nice thing is all of my indicators, I can adjust how far the indicator is from the, or how far the symbol is, or the signal from an indicator. It's all adjustable. You can change colors. And the nice thing is all of these are outputs that can be used with third-party tools. I'm very generous about making sure all aspects of the indicator can be utilized as outputs. So now in a more regular part of the trade day where we're not in some manipulative cyclical, institutionals gaming the open to their own advantage for their rebalancing or for their positioning ahead of the day, where we get more normal oscillations, you get some very pronounced moves out of these signals that you can work with. And there's a very important element in strategy building. I call it the 1-2, and it's especially important and a good part of pivot point trading style. I call it the 1-2. So let's say I get a signal that looks good. I get a diamond dot. It's slanted up. I'm getting a crisp reversal, and I get into the trade on a long. If the first one, and I call it the 1-2, it's a principle when you build systems. You want to see this. If the first signal doesn't work, can I get enough on the second signal? There's a diamond dot to at least get back the negative or the inability to get any profits on the first move. Can I then get it on the second one? Yes. So here was a diamond dot that doesn't fit the pattern I'm looking for. Here was let's go right here. Here's diamond dot, follows the pattern. I get into a trade and right away I get a green diamond. Hey, at a minimum, bring my stop to break even plus. And if it comes back up in my face, no big deal. But so if I didn't get the hit I wanted on the first leg, one, do I get what I need to get my objective on trade 2, 1-2? If a lot of your like 85, 90% of your 1-2s are profitable, 1-2 profitable, 1-2 profitable, 1-2, you're getting very dialed in and your strategy is very effective. That's an important principle I learned from institutional side trading and systems that are automated a lot of times. If they don't get the profit objective on what we'll call the first trade, on the second trade, any negative P&L they've had from trade 1, when they get back to flat or break even, they'll take some of the position size off of trade 2 and leave a lower amount of runners on. And then whatever they get out of it, hey, that's gravy. But at least they've neutralized the trade 1. So let's say in trade 1, it lifted, rotated a bit, and you blip out of the trade, and you lost, let's say, 22 points on the trade. Okay, then the next trade, when you get 22, 23-ish points in the money, and you're trading in units of 3, take 3 off. Okay, so now you're at break even from the 2 trades, and then what the 1 runner gets is gravy. Then the next trade, you start over. Trade 1, boom, got your profit objective. Trade 2, boom, got your profit objective. Trade 1, rotated on you, you lost 27 points. Trade 2, I got my 27 points, took off 2, let a runner run, got a little extra. Trade 1, reversed, I lost 28 points. Trade 2, got me the 28 points and then a little. There are automated systems that are built to do that, and they make the equity curve hyper smooth, which means now I can go trade size. So you can take an equity curve that would traditionally look like this, that's still good, and you can make it look like this. So it won't be as pronounced. It'll tend to be more shallow, but it's smooth. It looks fake. With fake looking equity curves that are super smooth, you can grow your position size per trade. It's a more stable equity curve. There's less wobble to it. So these are all things that you learn. And I've been doing institutional FX trading for 9.5 years. These are all things I've learned from interacting with quants or the financial side quants and how they take a strategy that's working and then go spend 3 months smoothing it out so they can make the equity curve look fake, but actually trade more size, or take a system and get the wobble out of the equity curve, even though it's a good system, just to make it more stable so they can grow the amount of liquidity that they're trading on it, because who's bringing the liquidity feels more and more comfortable with the overall approach to trading. So yeah, there was some fantastic moves, and the whole idea is hurry up as early as you can in the day, get your hit, get your daily profit objective, and then get out of the market with this approach on what I would call more of scalping to almost getting into intraday position trading timeframes. Now, there's other time frames where I can go way up higher on the time frame, and I can just go catch the bigger picture moves, and I don't care about any noise or oscillations in price like we had out of the open this day, because I'm trading a smaller amount of position size. So I don't care if I'm, let's say the system says to be short, and I get in some sort of short trade out of the open, maybe in this area price, and the whole time the system says to stay short until maybe in here it says, okay, now reverse and go long. And then over here, now it says reverse and go short. Now I'm trading less size. The oscillations of price are pretty big, but in relativity to the amount of position size and my objectives on the trade, my objectives on the trade are catching the bigger picture moves and just yawning through cyclical chop. Cyclical chop means nothing to me because eventually I'm going to catch one big enough move to get me done, or at some point in the cyclical nature of price, even though I'm doing intraday position trading, one of the moves after I get in will get me enough positive that I can be to what my daily profit objective is to be done, because we're trading prop accounts. So these are discussions about trading something where I got to be flat at the end of every day. If I'm going to go in and trade for multiple days and do swing trading, that's actually easier. It's easier to do that with pivot point trading. It's way easier. You can do mind-blowing strong trading, swing trading with this style, especially when you combine it with something like super bands. So when I'm getting excursions outside of the bands with a pivot point approach on a higher time frame, when I get the reversal, hit it hard. And we go out the other side of the bands, I get the reversal, hit it hard. That's a different style of trading because I might be in trades, day and a half, 2 days, 3 days, 4 days, weeks, according to or relative to the, time frame that you're on. But anyhow, I'm talking more about here is taking this style and dialing it in to go attack prop accounts, either automated or very mechanical manually, to go get your quick 20 or 30, 40 point hits in the NASDAQ or, on the ES, whatever amount of points you're going for, just real quick, go get a hit, get your signal, get in, get your hit, go flat. Get your signal, get in, get your hit, get out. Next one, until you get over daily goal. Sometimes it might only take you one trade. If you're going for like $700 a day and 150K account, 1, 2, I'm done. Trading like really low position size. So there's many ways to use this style of trading to go in and with a very kind of a precision mechanical approach, go get your hits for the day so you can be done day after day after day after day and make your money by trading many accounts at the prop firm on TradeCopier, not going in and saying, oh, I got to make $2,000 every day in my 150K account. Forget that garbage. I'll take 550 to 700 a day every day like clockwork on my account over having to go make $2,000 a day on each account. Why? Just go in, get your hit, get out. And look how terrible the feeds have been lately. Rithmic feed, disastrous. Rithmic should just close their doors. That's how bad their feed is. Like, it got to the point on anything that uses Rithmic feed, like Apex accounts I trade, I put DTN IQ feed in to power my charts. And I just use the Rithmic feed for the order routing, or I trade copy out to the counts that are on Rithmic feed. So it's just like, why not make it so you can go in and get your daily profit objective done as quick as possible each day on the predominance of your accounts? And then, let's say you're trading 5 TPTs. On 4 accounts, do the rock solid, highly consistent day after day, go get my daily profit objective. Now, in one of the accounts, maybe do a little intraday position trading. That's up to you. You can do that. So anyhow, just want to show you different ways that the Pivot Point group is really starting to share some great ideas and coming up with some great settings and different ways of attacking the markets with this pivot point approach. So anyhow, if you have any questions of me directly, info@gridalgo.com. You guys have a great weekend. I'll have more great content posted up on Sunday. Talk to y'all later.